It's absolutely critical for the American people to follow the guidelines for the next 30 days. It's a matter of life and death, frankly. It's a matter of life and death.
President Donald Trump has issued his starkest warning yet on the coronavirus outbreak in the U.S. His administration had initially planned to lift social distancing guidelines on April the 12th, but is now extending the measures to the end of the month. The U.S. has more confirmed cases than any other country, while its death toll has topped 4,000, surpassing even China's. But the White House is painting a much grimmer picture. It says fatalities could shoot up to as much as 240,000 in the next few weeks.
As sobering a number as that is, we should be prepared for it. Is it going to be that much? I hope not.
The rapid spread of the coronavirus has been the biggest concern for investors. Disruptions to the world's biggest economies from shutdowns have triggered fears of a global recession. In just 16 days, Wall Street stocks plunged 20% from their record highs, the fastest fall into bear market territory in history. The Dow Jones has recorded its worst quarter since 1987 and its weakest start to the year in the index's 135-year history. Meanwhile, the so-called fear gauge of Wall Street, the VIX index, has soared to an all-time high. The stock market isn't the only thing in freefall. With most of America's 50 states under some form of lockdown, economists at the U.S. Federal Reserve have warned that the unemployment rate could rise to 32% by the end of June, with an estimated 47 million job losses. In New York, the epicenter of the COVID-19 outbreak in the U.S., volunteers have pitched in to help set up makeshift hospitals in Central Park, a convention center, and a tennis complex. The facilities are in addition to the U.S. Navy hospital ship the Comfort, which arrived on Monday.
We don't know when exactly it peaks, but we know April's going to be very tough, and I'm trying to gird people for the possibility it will continue on into May.
For the next 30 days, many U.S. streets are set to remain empty, and with both human lives and the economy at stake, the fight against COVID-19 and the financial fallout is just beginning. Laila Humairah, TRT World.
Well, for more on this, let's speak with Bruno Verstraete in Zurich. He's a partner and chief economist at Lakefield Partners. Welcome back to Money Talks, Bruno. Now, we heard there a very sobering warning from Donald Trump and his experts, up to 240,000 deaths projected with the current measures in place. I'm wondering, do you think a warning like that, would that lead to a prolonged lockdown of the economy?
Well, looking at China, which already went through this previously, they were perhaps a bit late, but they enforced the whole population to take measures. Europe was clearly late and probably did too little, and the same with the US. But it is kind of a domino. You first had China, then you had Europe, and now we have the US. It's clearly going to be a tunnel. What we as economists don't know yet is how long the tunnel will be. And the longer the tunnel is, the darker it gets in there. And I think the lockdown is clearly something which shouldn't be underestimated. Everyone looks at the speed of recovery and the diminishing number of cases in China. But if we look at the measures and the lockdown they had, that is clearly not in line with what we see in Europe and for sure not in the US.
No, I guess right now, first and foremost, this is a health crisis that authorities must tackle. But the next step is the economy, as we know, and it affects people's livelihoods in other ways as well. Now, we know lawmakers signed that historic $2 trillion stimulus package last week, which includes checks to every American, bailouts for industries affected, such as the aviation industry. But now Donald Trump's talking about potentially another $2 trillion package, this time focused on infrastructure. Is this kind of strategy the most effective in terms of trying to protect the economy from the effects of this pandemic?
Well, it's clearly a global whatever it takes. And I think what they promised to do is to make sure that the revenue of the companies which are suffering will be compensated, and that the unemployment as such is not going to be of permanent nature. So they will bridge the income to make sure that the consumer, which is crucial to the global economy, that the consumer has a deferred demand that he does, in effect, spend on goods. One thing one should not forget is that services, all the lost revenue is gone. It will not come back. So for sure, it will take more measures to compensate, and fiscal stimulants is basically the only thing left. Interest rates are close to zero or negative in the case of Europe. So there's not much left to stimulate the economy, but to invest more in it.
Now, looking at the stock markets, the Dow and S&P 500 just recorded their worst first quarter on record. What can we expect from the next 3 months, do you think? Will things get better or worse for equities?
Well, I think first they will get worse. Clearly, this is a crisis which we have not seen in the last 100 years. The demand shock and the handbrake that was pulled on the economy is of such a nature that it's much deeper than 2009. What we haven't seen so far is ripple effects that make it into a structural issue. So it really depends on the duration of this. If this can be bridged and it's short enough, then I think the economy will come back quite quickly. If it doesn't, there will be collateral damage in bankruptcies of small and even big companies, which could then become a systemic issue. And I think that is the fear that the market has now. We go from a panic reaction into a real crisis situation. The numbers will look really, really bad in the quarter to come.
Okay, Bruno Verstraete from Lakefield Partners in Zurich, thank you again for your analysis.